It's a well-known fact. Precious metals are known to be a hedge and protection from a declining economy, as well as what Ronald Reagan famously called the thief in the night: inflation. Think about what you can buy with $20 today. Did $20 buy you less or more items 20 years ago? Did $20 buy you less or more items 50 years ago? What about 80 years ago? Yes, 20, 50, 80 years ago, $20 was considered significant money. Today, that's not the case. Paper money has a proven track record of being a depreciating asset. On the other hand, today, an ounce of gold buys you the same or more items it did 20, 50, or 80 years ago. Much like death and taxes, eventually, inflation is a guarantee in life. Now, in the case of the economy, everyone has a different opinion. Of course, Obama paints a rosy picture. Do you believe the economy is getting better or worse? Whether you're investing in stocks, bonds, or precious metals, the state of the economy is crucial to the performance of your investment. However, ultra-rich and successful investors will attest, if you're properly hedged with the right type and the proper percentage of metals, it really doesn't matter. We believe in this short video presentation, you're going to learn solid research and a common-sense approach to the gold and silver market. So here are the meat and potatoes of the research. First and foremost, precious metals are a diversification tool. We believe in diversifying within. Whatever funds you believe are proper for your own individual needs, well, out of those funds, we believe that to be properly diversified, one should look to a 40-60 split. 40% gold and 60% silver. Obviously, there are reasons and math behind it. For close to 15 years, with the exception of 2013, which, by the way, makes today's price an even better precious opportunity, from low to high, gold has seen a 29% average gain. That's an estimate every year on average for close to 16 years in a row. Doing the same math during that same time frame, silver has seen a 39% average gain per year, except this year so far, which again makes today's prices a precious opportunity. So at this point you might be thinking, well, if silver tends to see higher gains, why not put everything into silver? That's because silver is a bit more volatile. So, if you go all into silver, you're going to see bigger fluctuations every month. In our estimates, it's crystal clear over the past 15 years, the perfect combination for both the potential of profit and safety has been 40% gold and 60% silver. With that said, we can't ignore the demand factor. Research shows that over the past 5 to 6 months, there has been more insider buying of silver than just about any time in recent history. So, who's secretly stockpiling silver? China and Japan-based institutional hedge funds and mining company CEOs. In fact, we've been primarily focused on silver during the exact same time frame. Mind you, we believe strongly in gold. Nevertheless, we strongly believe silver will outperform gold and everything else out there. The way we see it, it's really common sense. You see, gold is a precious metal, and for the most part, nothing else, especially at these prices. Silver, on the other hand, is a precious metal, plus it's also an industrial metal, meaning it's in the telephones we use, DVD players, televisions, computers, radios, cell phones. Everything has silver in it. And even though the world economy is slowing down, we're still seeing industrial demand overseas, especially out of India, Japan, and China. So, we know demand is growing, while supplies are not. Again, to us, it's common sense. Imagine for a second, hypothetically, you're the owner of a mining company. I'm sure you would agree, as an owner of any company, your main goal is to make money. Well, let's say you're the owner of a mining company. You know your estimates. It takes the same amount of money and effort to pull an ounce of gold out of the ground as it does silver. Well, if you dig up an ounce of silver out of the ground, you'll get X amount of dollars, today's silver price for your hard work and effort. But if you pull an ounce of gold out of the ground, you'll get hundreds more than silver. Obviously, your focus and efforts are best spent going after gold. Does that make sense? Think about it. Between labor costs, which are growing across the mining industry, just look at the recent worker strikes for higher wages in places like South America and South Africa, and energy prices to keep the massive machines in massive mining operations moving 24 hours a day, 365 days a year. Hey, we all know energy prices will only continue to rise. Gasoline, diesel, and crude oil prices that still remain north of $100 per barrel. Meaning, with rising energy and labor costs, at today's price, silver just really isn't worth it. Silver is considered to be extremely undervalued. Silver is literally hovering below mining cost. Not to mention, if you look at the market historically, back in 1980, gold hit $850 per ounce. At this point, I'm sure you know gold is a hedge against inflation. You see, there is a mathematical equation that correlates the price of gold and inflation. And inflation is determined by the Consumer Price Index, known as CPI, which is believed to be phony. Inflation is much, much higher than what government reports. What do you think? Nevertheless, even using their official numbers, gold at $850 in 1980, adjusted with government-reported inflation, means today gold would have to go to $2,900 per ounce in order to reach the same inflation-adjusted highs. And, doing the same math with silver and CPI, silver hit a high of $50 per ounce back in 1980. Ladies and gentlemen, today, that would mean silver will have to go to $139 per ounce. That's using official government inflation data. As a hypothetical example, let's say silver is at $25 per ounce. From $25 to $139, that's over 450%. Remember, many prominent economists believe real inflation is much higher than what government officially reports, meaning the $139 target could be a very conservative estimate. Ladies and gentlemen, just look at today's silver price to determine your remaining profit potential. Bottom line, the profit potential is much, much higher in silver. Does that make sense? The last reason I prefer silver is that beyond the CPI mathematical equation, gold and silver, they themselves have a mathematical equation that correlates the two, which states gold and silver are balanced when trading at a 16-to-1 ratio. Some reports say it should be 20-to-1. If you believe gold and silver are money, then an argument can be made as to a 20-to-1 ratio. Here's one way to analyze it. But first, if you're watching this video, I have to assume you know the US dollar was once backed by gold. At one point, you were able to take a $20 bill and exchange it for a $20 Liberty, a gold coin, approximately an ounce of gold. And if you needed change, you were able to take your $20 gold piece and exchange it for 20 silver dollars, approximately an ounce of silver each. Think about that. 20 silver dollars to a $20 gold piece. A $20 gold piece to 20 silver dollars. Hence the 20-to-1 ratio. Does that make sense? Currently, gold and silver are trading approximately at a 65-to-1 ratio, meaning silver is extremely undervalued. Ladies and gentlemen, at this point in the presentation, you might be thinking, yes, silver recently hit just about $50 per ounce in 2011, but with all the demand and supply factors, why isn't silver at $100 or $150 per ounce? The London Fix. Manipulation. Ever heard of the LIBOR manipulation scandal? This is much bigger. Without boring you with the details, the London Fix is best described as: the London Gold Fix involves London's 5 biggest bullion banks establishing a common transaction price for purchase and sale orders. They do this twice each business day. They have been in charge of price fixing since September 12, 1919. Think about that. 5 big banks controlling the price. Yeah, that sounds fair. Reuters recently reported, gold price benchmark open to manipulation, London Metals Exchange. Bloomberg recently reported, Deutsche Bank, HSBC accused of silver fix manipulation. Now, this is why we believe this is the best time to look to silver. Manipulation is coming to an end. Free markets are about to prevail. There are newly established silver exchanges in places such as Australia, India, and Shanghai. The Wall Street Journal recently reported Thomson Reuters CME to provide electronic replacement for Silverfix. More than a century of tradition ends with the introduction of new system. Ladies and gentlemen, there has never been a better time to look to silver. Lastly, if not the main reason silver is still undervalued, it does not get media coverage. Think about it. When was the last time you saw a news story on CNN or Fox News on silver? Bottom line, no one talks about it. Regardless, it comes down to supply and demand. The Silver Institute, along with Thomson Reuters, a leading research firm, has compiled data of every aspect of supply, from mine production, government sales, hedging supplies, down to scrap recovery, versus demand, from jewelry, coins and bars, photography, industrial demand, down to silverware. The end result is there is a negative net balance of 113.3 million ounces. Doing some basic math on supplies and demand, in a matter of months, above-ground supplies could literally go down to nothing. Not too long ago, the SRS Rocco report reported Chinese silver inventories nearly 90% depleted at Shanghai Futures Exchange. And when mainstream media gets wind of it, that's when silver prices could explode, literally, overnight. In that scenario, that's when you'll see silver prices move up $1, $2, or even $3 a day. Pretty exciting, isn't it? But what if we're wrong? What if all the above opinions, analysis, data, and research are wrong? Hey, I've been wrong before. God knows I will be wrong again, one day. I just don't think it's today, and definitely not about silver. Nevertheless, ladies and gentlemen, here's the devil's advocate. But first, odds are, if you're watching this video, I have to assume you are not like most. You believe and feel there is something fundamentally wrong with the economy, the financial markets, and all of the debt created by the Obama administration. With that said, and for sake of argument, let's say you and I are completely crazy. We are completely wrong and out of our minds. There's no recession. The economy is booming. King Obama made everything better. Kumbaya. I'm serious. Every successful investor looks at the what if. What if my assessment is completely wrong? So, here's a scenario. Let's say there's no recession. The economy starts and continues booming like never before. Well, when an economy is booming, especially in a relatively low-interest environment like we're in today, people have more quote-unquote spare cash. What do they do with it? They spend it. They spend the money they have, and let's face it, the American consumer spends the money they don't have. On what? All the new toys, new cell phones, TVs, computers, iPads, etc. Everything that contains silver. So, in a good or booming economy, demand for silver would skyrocket. And anytime we see higher demand, you tend to see higher prices. Folks, does that make sense? So, one way to look at this is not the type of scenario in which we're banking on the economy or financial markets getting better or worse. If you're properly hedged, it really doesn't matter. At today's price, silver could become the best performing asset for years to come. In fact, I believe that if you acquire silver today, in 3 to 4 years your only regret will be, I wish I would have bought more. In fact, unlike gold and most other assets, silver has a major advantage. Much like a vehicle with 2 gas tanks, if one runs out, the other one kicks in. Like gold, silver is a precious metal that tends to perform very well during inflationary economic cycles, as well as in economic and financial turmoil. Plus, if we're wrong on our assessment of the economy, well, in a booming economy, demand for silver as an industrial metal increases. When we see higher demand for anything, we tend to see much higher prices. Does that make sense? Again, I truly believe in 3 to 4 years your only regret will be, I wish I would have bought more. Have you ever thought of putting your money to work? Another way to see it, silver, it's like a vehicle with 2 engines of driving force, precious and industrial. It really doesn't get any better. Do you have any questions? Call us today. Don't put it off.